Lou Basenese, founder and chief analyst of Disruptive Tech Research, is here. And Lou, here we go. You know, of course, the big question is the timing of all of this. It's been a really rough week for the markets. Is this bad timing for Uber as you've got the Dow down 650 points so far this week?
Yeah, you don't get to pick your timing for an IPO like this. You can't predict that. So but my warning is, please, people, don't be a crash test dummy and buy this IPO today. It is just a recipe for disaster. Super high valuation, slowing revenue growth, and massive losses. There has not been an IPO in the history of the market that has performed well with those parameters, and I don't think Uber is going to be the exception.
Okay, but just and point taken, and those are good warnings from you. And there's what they're expected to raise, $8.1 billion, $82 billion valuation. I know you don't like it, Lou. I can hear that. But at the same time, does Lyft kind of play into your thinking here? Because there was a lot of excitement about Lyft, smaller ride-sharing company. It's kind of crashed and burned on the market. Is this a piece of your thinking?
Yeah, it is. Look, I mean, it's not going to be different than Lyft. It's a perfect proxy. I mean, it is a smaller competitor. They aren't branching out into as many different businesses like Uber has Uber Eats and Uber Freight. However, the performance in the aftermarket, I mean, it popped on the first day, and now it's down about 40% in 40 days since that time. So I think it's really instructive. History may not repeat itself exactly, but I think it's going to rhyme pretty well with what happened with Lyft.
And one of the things that happened with Lyft was the short selling, which then Lyft, of course, got upset about. Then when they reported earnings, they basically said, well, investors don't understand how how our valuations and our accounting practices. Well, they kind of insulted the street. Uber and Lyft have both been criticized for how they're actually presenting their companies. Uber on the roadshow about their basically the accounting practices and how they're, especially when it came to, this is my favorite one, how they treat rider discounts and refunds. Uber's getting a lot of grief about that.
Yeah, look, we see this with a lot of the high-flying growth IPOs coming out of Silicon Valley. They try and redefine the fundamentals and the metrics they should be measured by. If you remember, Twitter tried to do this too, right? They were coming up with different metrics every couple quarters, how you should measure growth. At the end of the day, it comes down to profitability, right? If the stock's going to do really well over the long term, it's got to at least demonstrate the potential to be profitable, like we saw for years with Amazon and its high-flying growth, and then it did convert into profitability. So it's time to grow up for these companies.
Yeah, so maybe not jump into it today, but at the same time, a lot of folks are going to thinking, well, if there is a pullback, maybe not today, but if there is a pullback on Uber, what is a price point that would make you want to buy it? How cheap?
Yeah, cheap. Yeah, cheap is right. Like, what's cheap? So, I mean, it's coming to market at 7 or 8 times revenue. S&P 500 companies trade traditionally around 2 to 3 times. So maybe it's interesting at four times revenue if there's a path to profitability. But I think that's a huge if.
Interesting. Well, I'm the girl that didn't buy Netflix at $4 a share, so we'll see.
You also didn't buy Snapchat, so give yourself a credit for that.
Lou Basenese. Lou, thank you very much. Be sure to watch Mornings with Maria today, by the way. We're going to have some more breaking earnings news this morning. Everything's winding down. Media companies, Viacom, Tribune Media, EW Scripts. We're also getting Marriott today, by the way.
And guess what? No earnings recession. That didn't happen. Let's get you some other headlines making news this Friday. Federal Reserve Chair Jay Powell warning about a decades-long slowdown.